Best stocks to buy in 2020. Welcome to the channel, guys. My name is Domenico. Today we'll be discussing a few companies that I believe have huge potential for 2020 and beyond, and that you can make a lot of money in the stock market. So just keep in mind that these are long-term predictions and not short-term predictions. Anything can happen in the short term, but in the long term, I do believe these companies have huge potential and massive upside in terms of their business. If you do enjoy the video, guys, don't forget to leave a like and subscribe to the channel down below. I talk stock market and investing on this channel, so if you are into that, you might want to subscribe. But let's get right into the video. Alright, so first up we have Uber stock. Uber is around $30 a share currently and makes up around 13.5% of my portfolio right now. So we have a few things written down here, and I'll be going through each one of them, explaining why this is a massive opportunity for the company. First, we have ride sharing. Ride sharing is the basic Uber app that you go on to request a Uber driver to pick you up somewhere and get from point A to point B, similar to a taxi. However, I don't see anyone using taxis anymore. To be honest, no one that I know, or either older or younger than me, uses taxis anymore. As soon as they need to get from point A to point B, they think right away Uber. So they have a massive moat around them. As soon as you think of ride sharing, you think of Uber. It's the first name that comes in your head, and they're the first or second major player in every market that they operate in. So that's huge for them. So Uber has a huge moat around the company because it isn't easy to build a platform where you have over 100 million users using your app every single month, at least once a month, using your platform. So they have a huge moat around the company, and it's very crucial to have a company that you're invested in to be number one or number two in any market they participate in. And it's a really hard market to penetrate, and you need a lot of capital to work in this space because of how hard it is to acquire all these consumers to get on your app specifically, and for drivers also to be on that app and to connect them anytime, anywhere. So that's a huge moat for the company, and that's why I believe that they will do well over time. They also have investments in Didi, which is the Chinese Uber, and they have a 15% ownership in Careem and in Didi. And in Careem, they own 100% of the Dubai-based company. That's like an Uber that operates in Dubai. So ride sharing is a massive opportunity for them. They have around 100 million users that use the platform monthly, at least once a month. 100 million users, and that's a lot of users. And as time goes on, they're increasing the number of users on the platform, and this is a massive opportunity for them because of how flexible it is for the drivers. So a lot of people prefer to drive Ubers than taxis, because taxis, it takes a lot of money to get started. You have to have your license, the taxi license, and apart from that, you also have to be on schedule. You have to be driving around. Instead, on Uber, you have one app. The people get on it, you're straight with the consumer, and it's a lot more flexible. You can drive whenever you want, however you want, and it's a lot safer than taxis. Taxis are not as regulated as Uber. Uber, you know exactly who the person is, what car they're driving, everything about the person, even before they come to your door. So that's a massive opportunity for them if they do execute on that opportunity. So also, ride sharing is profitable currently for Uber. So the ride sharing portion of their business is already profitable, and they're already making money on this portion. It's the only portion in their company that is actually making money currently for them. And I do believe that they will be making a lot more profits from ride sharing over time. But as more and more people transition from taxis to ride sharing companies, they'll be able to make a lot more profits over time. The next segment of their business that I do believe has huge potential in the future is food delivery, which is Uber Eats. Now, this space is currently extremely competitive because of the massive amounts of companies that are in the space trying to compete to acquire customers. The reason for this is because of the massive amounts of venture capital money that is flowing into the space currently. But as this money dries up, they will have no choice but to either consolidate the space, or the companies will basically go out of business. So by doing this, either Uber will acquire more food delivery companies, smaller ones, or their competition will basically go out of business, which is fantastic for them because they will likely take the customers they used to buy from that company over to theirs. Next, we have Uber Freight, and I believe Uber Freight has a huge opportunity in front of them because of the value they provide for the companies that use them. So basically, how Freight works currently is that a company that wants to get a product from point A to point B has to call a dispatcher, and the dispatcher connects the truck drivers to the company. The catch with these dispatchers is that they take 15 to 20% of the value of the transportation cost. So that's a huge cost for the companies and the truck drivers to get connected. Now, what happens with Uber Freight is they drop this commission to 1%. Now, from 15% to 1% is a huge difference. And that's why I believe that Freight has a massive opportunity in front of them. And it's also a lot easier and more efficient to connect truck drivers directly to the shippers and take out that middleman, and it's a lot easier to work out in the end. So it's like the Uber platform. Basically, the truck drivers get on there, it tells them what they're going to be transporting, how much of it, how much it's going to cost, how much they're going to be receiving as a pay for this transportation from point A to point B, and how long they'll have to wait. All the information they need is going to be right there on the platform. Taking out that middleman is extremely important. I believe that this is going to be huge for them in the future because of how seamless the transportation industry can become with the adoption of an Uber Freight platform. Next, we have self-driving cars, and this is a huge opportunity for Uber in the long term. Basically, right now, their largest cost is their drivers. Their drivers is costing them a huge amount of money. But once we have self-driving cars, which Uber is investing in heavily, these costs will significantly decrease, and they will only have to pay for the cars, the electricity to run the cars, because as we know, electric cars are the future, and they will have to have insurance for any damages that may be caused during the transportation of the customers. But other than that, they'll completely get rid of the cost of the drivers, which is the main portion of their costs. So when this does occur, their net income will increase drastically, and this will become a much more profitable company and much more valuable company in terms of the stock price. So overall, if the stock price does decrease in 2020, I will be right on the ball to increase my holdings. I do have already a large portion of my wealth in Uber, but I do believe in it in the long term, and I would not be afraid to buy more of it in the future if it does decide to get back below $26 a share. So that's my buying price. But apart from that, this is the reasons why I believe Uber has a massive potential in front of them in the future. All right, so the next stock is Facebook. Facebook is trading around $205 a share currently and makes up around 18% of my portfolio. Even though my cost base is a lot less than $205, I'm still very interested in Facebook's risk-reward profile as being my largest position in my portfolio at this time. So let's get into why I believe this stock has massive opportunities over the next 3 to 7 years. Okay, so first we have the Facebook platform alone. It has 1.6 billion daily active users and 2.45 billion monthly active users. That is massive, and that is only the Facebook platform itself. So despite people saying that this is a dead platform and no one uses it anymore, the numbers don't show that. Actually, it is actually increasing over the years. So that's something that's very impressive. Just thinking about these numbers, it's like 1/3 of the entire planet using this one social media site. So that's massive. And their daily and monthly active users for all their platforms has been increasing over time. So that's great news for them. Also, Facebook owns Instagram, Facebook Messenger, WhatsApp, and plenty more, including Oculus. These companies are massive companies, and they are all combined into one Facebook group. So if ever one thing were to happen with one of them, they still have all the others. And these are all major platforms, all have over 1 billion users every single day. So it's massive, and the company is a Goliath in the social media game. So first we have ad rates going up. So I do believe that ad rates will be going up as money comes in from TV. So what's happening now is companies have a lot of ads running on TV, normal television, normal cable networks. Well, what's going to happen is in the next recession, companies will be looking very carefully at the money spent on advertising. And when they see that the return on their investment is a lot better in Facebook than on television advertising, they'll probably move the bulk of their advertising money into Facebook and Google and online platforms. So the thing with this is, currently, not many companies are really looking too carefully at the money they spend on ads. But when they do, they'll realize that Facebook gives them a much larger return on the capital invested because of how much data they have on the consumers and how little you have to pay compared to normal television advertisements. So ad rates will go up because the way ads work on Facebook is the ones that cost the most are the ones that are shown first in someone's feed. So if a company bids $2 and the next one bids $3, then the next one is going to show first. So there's going to be a lot of companies bidding to get that viewer's attention because you don't stay on social media very long. So the companies that do want to be in front of your face have to pay a lot of money to get there. Now also we have growing net income at 35% year over year and revenue 25% year over year currently. That's incredible. And for a P of about 24, that is insane, and that is an incredible value. Next, we have Facebook is growing net income at 35% year over year and is growing revenues 25% year over year. As already a massive company, this is amazing for them. And to be trading only at a 24 forward PE, that is incredible for them. And this is an insane value in the market currently right now, in my opinion. Also, we have costs going lower. Right now, Facebook has hired a lot more employees and their costs have increased drastically because of this. But I do believe that this will be decreasing slowly as time goes on because they don't need to increase their workforce by this much every single year. I think they increased their workforce over 50% last year alone. So that's something that isn't normal at all, and this should be decreasing, therefore going straight back into the net income pile. Finally, Facebook's balance sheet is phenomenal. Let's take a look at the balance sheet. They do have $16 billion in cash and cash equivalents, along with $36 billion in marketable securities, which are both very liquid investments, and cash, of course, is very liquid. And they do have absolutely no debt. So this is an incredibly safe company as they do not have any short or long-term debt, whereas they do have $52 billion in very liquid funds at their disposal. And their incredibly safe balance sheet is just another reason why I believe the risk-reward profile for Facebook is incredibly in our favor as the investors at this point in time. No matter what the price is at, I do believe that 24 forward P is incredibly reasonable for Facebook for the long term. So that's why I might also be adding to my Facebook position in 2020. Alright guys, so that is the end of today's video. I hope you guys enjoyed the video. Don't forget to leave a like and subscribe to the channel down below if you did enjoy. And leave me a comment as to which companies you are interested in investing in 2020 to make the best possible return for your portfolio this coming year. So thank you for watching, and I'll see you in the next one.